fintech ecosystem is undergoing rapid transformation driven by digital innovation and shifting merchant needs. We take a closer look at the forces shaping this evolution. From post pandemic trends to the role of technology in scaling impact, Mintok is navigating change and what it takes to lead in a competitive, fast moving industry. Joining us today is Raman Khanduja, co founder of Mintok, an embedded fintech company revolutionizing how SME merchants accept payments and access financial services. By turning mobile phones into powerful payment and commerce tools, Mintok is bridging the gap between banks and merchants across India and the Middle East. With over 500,000 merchants on board, Raman and Mintok are on a mission to drive financial inclusion and, in their own words, mint the future of digital commerce. Hi, Raman. Thank you so much for joining us. And I thought we'd start off with a quick rapid fire question round for you.
Absolutely.
Not putting you on the spot, I promise. If your startup journey was a financial strategy, what would it be?
A super high risk strategy, one where you bet your house, garage, sleep to build something scalable, and returns compounding, but largely in character and receding hairline.
So, high risk strategy with a long term investment perspective.
That's what I believe.
Fantastic. What's more satisfying, onboarding a new merchant or seeing a significant increase in transaction volumes?
So, onboarding a merchant is like the first date.
Okay.
But when transactions start happening, that's when the other side texts you back, they introduce you to their family and say, let's scale.
Okay. That's an interesting one. And how often, so very interesting, but how many dates get converted into the meetings with the families?
That all depends on the first date.
Okay.
How impressive you are on the first date, that determines.
Okay. The biggest risk you've taken as an entrepreneur?
Swapping corporate Excel sheets and presentations for a startup idea and convincing my family that's a structured career move.
Okay. Cards, QR, UPI, SMS linked payments, your preferred mode of payment?
UPI, for sure. Because nothing demonstrates the India fintech flex like scanning a QR ping for your chai.
Okay. And one country where you'd love to expand Mintok next?
Saudi Arabia.
Why?
I knew that was coming.
You set me up for that, didn't you?
It's an interesting country with a visionary kingdom, for lack of a better this thing. They're building that infrastructure nicely. There are a whole bunch of SMEs waiting to be engaged and monetized, which is what our core is. It's like a fintech Disneyland, just with a stricter dress code.
Interesting. I'm not sure if, actually, maybe Disneyland will be quite happy to hear that.
I hope you would have said Saudi Arabia.
So, if I go into your journey, and I just want to get a sense of, for our listeners, what was the spark that led you to start Mintok?
So prior to Mintok, and when I say we, it's the three co-founders who started Mintok, myself, Sanjay, Rama. We used to be at Visa. We were a part of the India South Asia leadership team. And at Visa, we had a ringside view of how the country in general and payments in particular were evolving. So cash was still the king, but things were changing very nicely, where we always had the demographic dividend in our favor. Then around 2013-14 came the PMJDY. E-com started taking off. And we had this belief that point in time that the next few decades belong to India. That said, then the choice was, in that case, do you want to continue working for a large enterprise, executing somebody else's strategy, or would you rather build something on your own that you can be proud of? given that payments was one of the sunrise sectors expected to accelerate, the answer was, looking back at least, was pretty obvious. So, and then demonetization happened. It just strengthened our conviction. And we said, why not? Let's just dive straight in.
So at one level, I understand that if you look at the landscape per se, it was all primed up for you to get into the fintech space. But what was happening with technology that got you convinced that this is the space to be there?
Interesting question. It was a combination of technology and the environment. See, when we were at Visa, one of the big, if not the only initiatives was how do you, working with banks, convince customers not to use cash but use debit cards and credit cards. And there used to be a metric that we would measure, which was the penetration of digital payments in personal consumption expenditure, PCE. Around 12, 13, 14, that number used to hover around 5.5%, 6%, would move up by like 50 basis points, 0.5% every year. Despite the effort, we had about 1 billion debit cards, 20 million odd credit cards, but that number would just not move. And then, apart from the earlier factors that I mentioned, you saw what demonetization did. UPI got launched and demonetization was announced, and digital payments for those 2 months at least became a habit without which you couldn't survive.
Correct.
So those two events, seeing the changes post demonetization and smartphones with everybody, was that, I would say, inflection point which convinced us saying things would change. India would transform. India would leapfrog.
That's very interesting. And so Mintok as a brand happened. You spoke about your Visa experience. But was there really, and this is a very, very marketing question, was there really a consumer need that you were addressing, or was there just a sense that this is going to become a need?
So again, as I said, going back to the Visa days, Visa used to look at India at that point in time as the largest cash displacement opportunity available globally.
Okay.
There could be no better description of that time's India than this. And payments is an ocean with multiple ports which were full of friction and infra extensive. You needed plastic cards and a POS terminal on the other side. Both are expensive.
Right.
And there was friction. And things were graduating to smartphones. Everybody had data. Data was accessible. Everybody was moving from feature phones to smartphones. But there were elements of friction all across. So when we started, we realized the entire ecosystem would grow. But for the ecosystem to grow, you had to fix these multiple layers that define the so-called digital payment ecosystem. And that's where we picked the merchant side of it, because SMEs globally forever have been ignored. And the easiest way to reach them is payments, because payments is the most crucial activity for an SME. Payments defines whether their business will survive, payment collection. If there is extra money, then comes banking. So we said, let's start looking at the SME side of payments first, payment collection. Can we make it easy? Can we add things on top of it? Because as I said, SMEs globally have been underserved. Payments is the easiest way to reach them. As payments move from cash to digital, that's the most common basic tech that is available with every SME. Can you use that as a door opener? And at some point in time, once there is an engagement, overlay it with other financial services, open up access to financial services like loans and cards, which is something they're deprived of, to complete the entire picture.
So that's quite fascinating, because I remember a lot of businesses in those days had even come up with credit against what was swiped on your POS machines. I remember, some part of the loans, etc., was being addressed by a few startups who had identified saying, hey, if he's doing an X amount of business on credit cards, let's finance up to a point and not beyond.
True.
So it was already happening in, I think, murmurs around the country. But
that's an interesting part you brought in. But look at the friction. See, you have, let's say, a shopkeeper who is accepting payments, digital payments on the POS device.
Correct.
People are swiping their cards. The provider of the POS has all the data to underwrite this SME for, let's say, a pre-approved loan.
Correct.
How do you tell this guy there is a pre-approved loan? You can't communicate on that POS device. You will end up either telecalling this person, which is expensive, or sending a salesperson to meet him or her saying there is a pre-approved loan. And your salesperson gets in front of this shopkeeper, says there's a pre-approved loan of 3 lakh rupees. And the shopkeeper says, I don't need it.
Correct.
You still have to pay salary to the sales guy. And that's the challenge with SMEs. Their needs are so irregular. Their needs are micro. They don't have time to come to the bank branches. So how do you serve them? Versus today, what happens is you go to any outlet in India, big or small, you will see a QR.
Correct.
You scan the QR even to pay for chai, and the shopkeeper will open the app on his or her phone to check whether the payment is received or not. When they're looking at that app, they see one more message saying, 2 lakh rupees ka pre-approved loan.
Correct.
They ignore it. Next time another customer walks in, scans the QR, shopkeeper looks at that app, they see that message again. 2 weeks down the line, this guy needs a loan. He or she doesn't think bank. They know there is a loan on the app that they see every day. And that's a big transformation that has happened.
True. So it's made it easier.
It's
to
made
access.
it super easy, yes.
Okay. And as you started the business, and I'm sure as businesses, you would have made assumptions, you would have said something is going to happen. What did you learn? I'm not going to say, did you get it wrong, but what did you learn that was different from what you had thought was going to happen?
What we started with versus what we are now, it's closing in on 180 degrees, I would say. This was not the initial idea. So the success rates or the failure rates was as high as 15%. 15% of the... At the same time, while internet was catchy, the voice network was very robust. Voice was available everywhere, even in the remotest parts of the country. So we said, can we not use voice as a fallback so that if a transaction drops because of internet, we process the same transaction over the voice network? And that's how we started. We thought that was a big problem. It actually was, because we saw that in the data. Took us some time. We created a solution, which was a fallback solution. Incidentally, the place where we are sitting today, this is the area where we interviewed our first set of merchants. And this place was horrendous on data, internet. I'm talking 8 years ago. And when we cracked the solution, we thought, if not merchants, we would get nominated for some Nobel Prize because of the capability we developed. We went out with market research to merchants and they said, we like it, but we won't pay you for it. Why? Because Jio is coming. We under-anticipated, if that's the right term, the impact of transformation Jio would bring, or we ignored. As a result, the market research, while our initial offering, people were receptive, not too keen, it allowed us to see the other problems they were facing.
Okay.
There was chaos at the till. A merchant would have to toggle between cash, cards, wallets, UPI, and UPI and wallet means different offerings from different players. Correct. And they were just toggling between multiple apps. And that's where we said, this cannot continue, because if the core challenge merchants face is lack of bandwidth, this is just aggravating it. And that's when we changed. We created an omni-channel payments app that allows merchants to accept payments on their smartphone. And they can also access financial services on that same app. The next problem that we figured was, how do you distribute? And that's where we coming from Visa, we realized that for anything money, the kind of trust that banks command is unparalleled. So we said, why not partner with banks, offer it as a white label solution in their brand, they take it to their customers. And that's what Mintok is. But what we started was data over voice, which neither got us a Nobel Prize or where there's keenness in the merchant segment.
So that brings me to another very interesting thing, because banks per se, in this country at least, were seen as legacy tech guys, right? They didn't want to change, they didn't want to adopt, they didn't want to adapt. Was the perception. I'm not saying it was the truth, but was the perception that here is a whole bunch of guys who are not willing to do that. And then there was a whole bunch of startups who were doing everything tech, but they didn't have the trust that banks had. What converted banks to work with you?
That's a great question. So if you go back a few years when UPI started taking off, it was all PhonePe, Paytm, Google Pay. They did a wonderful job making UPI payments, scanning QR, bringing that to muscle memory.
Correct.
And banks initially took a backseat for the reasons you mentioned, because this is not just putting a QR. For every QR, you have to get the merchant to download an app. An app is a very dynamic tech product because you need to change it every month, improvise it, add campaigns to engage customers or merchants. That's something that banks find it tough to do because it's not a one-time build thing. It's a very continuous or evolving thing. They have legacy infrastructure, as you rightly said, infrastructure that cannot be overhauled or changed overnight because that's been built over decades.
Correct.
And the decisioning is slightly more bureaucratic and time-taking. So banks were initially okay taking a backseat, saying, let the PhonePays and the Google Pays of the world and the Paytms of the world do UPI payments, because the money end of the day was coming into the current account, which was owned by the bank.
Correct.
But over a period of time, banks started realizing while they're getting the money in the current account, the merchant is engaging these fintechs for other products like loans, insurance, obviously because they are looking at that app much more than the mobile banking app, and they're not visiting branches. And that's when banks said, like, if they don't participate, they will not only lose the product, but the entire SME customer. And SME is like, as I said, like SMEs have been underserved. It's like one of the large untapped opportunities, and banks didn't want to miss out on that. Now, they had trust. They didn't have tech. Fintechs had tech, were looking to disrupt banks. They didn't have trust. That's where we came in. We said, like, if we can plug this tech gap for banks, they already have trust. That's easier to do. We will do that, be that arm. And to make the decisioning easier for banks, we said we will offer it on a subscription basis. So the upfront risk is entirely ours. It's in your colors. You take this product to your customers who are using a fintech product, offer it as your own, and now you have an opportunity to offer these same customers or merchants loans, cards, insurance on the same app. Mm-hmm. So it was more about the risk of losing that customer than inertia. I mean, it started with inertia, but then...
Okay. And so business scaled. And at what point in business did you think that it was the do big moment, as I would call it, to now say, hey, I'm not happy enough with just India as a market. I need to go global?
Actually, both happened in parallel. It's around 2019 when we had completed our thesis, the product market fit. We were pitching to banks in India. Around the same time, the world had started taking note of India. Earlier, for all things digital payment, the world would look at the US. Now, especially the emerging markets started looking at India, wanted to emulate India. Because India had become a role model for infra-light payments. And you don't need a POS terminal or a card. You just need smartphone, which is with everybody, and you scan QR and make a payment. India became a role model. So people were starting to take a note. That's the time we used our Visa Connects to parallelly pitch to banks outside India, Southeast Asia, Middle East. It was early 2020 when HDFC signed. At the same time, Burgan Bank in Kuwait said yes. And that was time we got that confidence, saying like, if the largest private sector bank in India saying yes to a platform and there's a bank outside, we are possibly ready for the world. I mean, the platform that we created for India can be the platform for the world.
And did you have to tweak the platform to go to the world, or did it work?
Interesting thing is the way the platform was architected or is architected, it's completely microservice and modular. So what we offer to banks is an a la carte menu, not a buffet. So they can pick and choose modules that are relevant to their market, to their SMEs, and we package them in an app or embed it in their app rather than saying it's a complete platform, take it or leave it. So we didn't have to. The parts of the platform that resonated with banks in the Middle East.
And they took that. Oh, very interesting. Which is, other than Saudi, another market that is?
So we are already live in Kuwait. We are already live in UAE. We should be live in Bahrain shortly. And then in Africa, we have clients. We have APSA and we have NMB in Tanzania.